Welcome to our options earnings trade of CarMax. I've been doing a lot of work this year trying to emphasize the value of trading options, and I don't mean buying options. I mean selling options for cash flow in a market that is, and I do this every Sunday night live here on YouTube or Twitter, wherever you see me, in a market that is very, or in these words, strongly overvalued as measured by the Buffett indicator. We began heavily back in April, pulling back from large equity positions and focusing more on cash flow strategies with members. Why? It's because this market could get blown up at any time. You take a look at the valuation of the market, you take a look at the technicals of the market, and you could wake up one morning and you could see Dow down 1,000 points easy. And all of a sudden, people panic. You have high margin debt, and panic begets panic, forced liquidation. I don't want any part of that. We're going to do small, short-term swing trades on equities, as we always do. Yet, we're going to take a over the horizon approach to trading stocks, meaning I want to be able to control my positions from afar, meaning I want to be able to dictate my probability of profit and my risk versus reward in advance of entering the trade. Options allows me to do that. And again, we're not buying them, we're selling them. If you're wondering, what am I talking about? I did a video finally below talking about the Strangle. Go to that video, view it, come back to this one, and you'll know exactly what I'm talking about. So let's do an example. Last night, we opened up a trade on CarMax. They reported earnings this morning. I haven't taken a look at the numbers yet. We'll do that together, but they're up in the pre-market at last look. So let's go take a look at it. And I'll share with you the whys of why we entered the trade, how we selected our strikes, and how much money we're going to make on the trade percentage-wise. So let's take a look. Let's hide that. All right, so CarMax reported they were higher. They still are higher, but they're well off the highs now. Let's take a look at their numbers. Higher Q3 profit, sales, strong car demand, blah, blah, blah. They're beating. I'm looking for their forward-looking guidance. I'm sure it's in here somewhere. I don't want to bore everybody to tears, but it appears as though the street liked the number. There may have been a news event since the report was initially announced, because the first knee-jerk reaction, which is often the wrong reaction, the shares of CarMax ripped up higher to a high of 144 before backing off. The shares closed at 136.99 last night. So with this options trade, this strangle that we put on, our selling of the options, are we worried one way or the other about earnings? No, I'm not. I could care less. The value here is that our strikes are up here. Here, I'll show you the exact confirmation of the order. This is our members Slack channel. All right, so here's CarMax. Where's the execution? Did I not post it? Maybe I didn't post it. Oh, that's right. We were live. We were live when this got executed. Our strikes are up here. The 155 strike to the call side. We sold to open. The 115 strike to the put side. So we generated a credit of, I think it was roughly $1.39 per contract times 10 contracts is $1,390. Our return on capital, if we are profitable on the trade and we allow them to expire worthless, it took us, what is it? 1390 point divided by 15049 equals. That's about a 9% return on capital. That's how we measure our success of our options trades. That's a 9% return in one day, basically a 24-hour period. So a nice trade, assuming that our put side or our call side doesn't get tested, but it appears as though at current, we're looking okay. Let's go to the pre-market again. This is a 4-hour chart. Our put side is down here. We'll create an alert. The probability of the puts getting tested, highly improbable, especially when these options expire worthless tomorrow. Remember, the markets are closed on Friday. Now, I'll share with you why we entered this trade, what the value is of us entering this trade. And I'll share with you why we entered the strikes where we did. All right, so as long as we don't test 155 or 115, we're loving it. We're having a great day. I don't care about their earnings. It doesn't matter to me because the probability of these strikes getting tested is highly, again, improbable. We deal with statistics, and it's not as if I sit here with a slide rule or determining what's our probability of profit. Let's take a look at the implied volatility. And you can see here that these are the tools that I use, folks. So here's the implied volatility. You can see that these are the options that we're trading, right? These are the ones that expire within 7 days. The current value of the call side and the put side are roughly 31% higher than they were last month. So that means that you're going to see what you call IV crush this morning. You're going to see a collapse in implied volatility. So the trade is a very profitable one, and these will probably expire worthless. Let's go over some charts in the pre-market. So KMX should do well for us. Moving on to, I want to take a look at the US dollar, which was cratering earlier. It's bounced a little bit, but the dollar is under a lot of pressure. And my guess is that if we close out this support level or this price action today at or below where we're trading right now, that'll be a break of daily support. So what you want to be looking for in this environment where inflation is ripping through the ceiling, you want to be looking at gold stocks. Gold is up. And it looks like it's going up higher. We're just shy of that critical psychological resistance level at 1800 to 1810. I think we're breaking out, folks. I think we're breaking out big time on gold in 2022. This will be the year of gold. We have naked put options on Nugget, which is a bullish trade, not a bearish trade. Nugget about flat this morning. They'll probably pop up. I'm loving the price action here this morning. And if you take a look at Nugget or any of the other gold stocks, how they closed out yesterday. Here's Nugget. Very close to a breakout daily time frame. Here are the junior miners. They closed just off the highs of the session. There is resistance above at around $41 per share. Gold yesterday closed down, which is surprising because the dollar was down yesterday as well. Bearish reversal bar. So this is what I mean. If the dollar closes, this is as of the close yesterday, if the dollar closes at the lows of where it's trading right now, you're probably going to have a bearish breakdown on the US dollar. And that'll be good for gold and silver. Speaking of silver, we're long of the AGQ. This is a leveraged ETF. Very close to a breakout here on silver. There's our support level. We're in a trading range. So we may be looking to add to silver as soon as today. Larry, good morning. Enjoy your time off, Bob. Be mindful. Thank you very much, Larry. Be mindful of oil and gas shortages in 2022 rather than chocolate. A better Christmas gift would have been a case of Mobile One extended performance full synthetic. Good point. Good point. Yeah, I'm cutting out of here probably right after the video, folks. For those not familiar, I'm going to be taking a few days off, going skiing. We rented a house up in Pennsylvania in the Poconos for Christmas. Normally we have it here. I've had it here for 25 years. We usually have about 30 people over, but my wife's father passed away in June, so this will be the first year without. And we said, you know what, let's rent a house, have a whole bunch of people come up, and we share the house, share the expenses and whatnot. So it's gonna be about 16 people. So huge house on a lake, hot tub, everything that you can imagine is there. It's gonna be nice. I'll post photos. All right, let's go to the equity markets, see how we're doing here. Larry, the best to your family. Before I forget, the best to your family. Merry Christmas as well. And thank you very much for all your considerations and thoughtfulness. All right, so let's begin with the Russell 2000. The S&P 500. We were higher earlier. Now we're off a little bit. Don't expect much volume here. I mean, this is going to be a very, very light volume. Volume between now and the end of the year is going to be negligible. Remember what's going on right now. You don't have the whales aren't at work. They're in Stad. They're in Aspen. They're doing their thing. Right now, you have a lot of computers in charge of the markets, and that's just the way it's going to be. So I would not be getting heavy in any one position. You want to speculate? That's fine. There's going to be a bias to the upside beside the fact that we're up right now. I would ignore that. I think that we're going to press up higher on short covering. And yesterday was not a big volume update. So it was just all short covering in advance of the holidays. And certain people thought they're getting a bargain. I think they're going to get a rude awakening in 2022. The NASDAQ down slightly. We were higher. A little bit of resistance above. I need to check out NVIDIA. We have a Strangle, which expires next week. I'm hoping that NVIDIA presses up higher here. It closed at 290 last night. I wasn't aware of that. I thought it was in the 280s. That's good. I could close out the position for a profit right now, but the probabilities are so in our favor at current that I'd rather just allow them to expire worthless. So for those just tuning in, our strategy of swing trading, it'll never change. We're always going to swing trade, but given the valuation of the market, given the technicals of the market, we're going to be far more market neutral in 2022, and we're going to be using cash flow strategies to profit from the market, much as what we did in 2021. It was a very, very good year, and I'm looking really to close out the year. So I haven't been putting on any big bets whatsoever in advance of the new year. So NVIDIA, we're up a tick versus yesterday's close, which is great for us. Our strikes on NVIDIA are up here at 330 and down here at 260. As long as those don't get tested, we're happy. Nike, we booked profits on yesterday. Earnings trade. That was an options strangle strategy. Again, folks, there's a link below describing how we trade strangles. I'm going to be talking a lot about them in the new year. I'll be doing more videos, but start with the video that I published. It's a very high-level video. There'll be more to come. CRISPR, which is one of our trades, behaving very nicely. I love the way it's consolidating on this 4-hour chart along this rising 20-period moving average. We're along the common stock here. This is not an options trade. It was an options trade on earnings, but we are now long of the common stock. Micron was almost an earnings trade, but Thinkorswim was down and I couldn't execute. But we did trade Nike for a nice profit. Not as much as we wanted because our call side got tested. PayPal, which we're long of, looking very, very nicely. I'm loving PayPal. Members, we're probably going to be adding more today. 4-hour chart on PayPal. And we have broken out. The key to remember here is that we've been here before. We have a little bit of deja vu going on. We did so back here, but then we failed. We've done it again. Do we follow through? Do we continue to break out? So how do we defend against a head fake or a bull trap or a breakout point failure? Call it what you want. Call it cupcakes. We don't want to see PayPal trading back down within this trading range. What we do is if we add more to our position, we stay very, very small. We tighten our stops. Simple as that. All right. So in appreciation of the holidays, what color will we make this? We'll make it a dashed line, something jovial, and we'll make it, I don't know. What's a holiday color? I already have green up here. I don't know. We'll do a light blue. I don't know. Is that a holiday color? It is now. All right. We want to see a continuation breakout on PayPal. So that's looking good. What else do you want to go over? Bitcoin. New member here. Hey, Jeff. In PayPal from 184-ish. So you're doing well. So you got in proper. I like where you got in. You got in with us, Jeff. So if you're going to add, I would just stay very, very small, especially this time of the year. Right? Because we right now we know that it's a good looking chart. It's a chart where in a normal trading environment where it's not a holiday season, I would be saying, you know what? If we get a new daily high, let's add more here. But we know that, let's go to the chart in PayPal daily time frame. Let's take a look at yesterday's volume because we got to put things into context, right? I like PayPal. It's well off of its highs. We made a good amount of money on PayPal on earnings and on other options trades. Now we're long with the common stock. Okay, good, Jeff. So you're in with us. All right, cool. All right. So PayPal, I got to tell you, the price action yesterday was amazing. Amazing. Look at this. We had broken out and we had a stop. I believe, Jeff, correct me if I'm wrong. I think it's in the members area. You had a stop loss at 181, thereabouts. And we fell just shy of it. In a normal trading environment, had we broken down below this lower band of support, I would have probably stopped out sooner. But knowing that the volume during this holiday season was going to be light and the market's easily manipulated, and the fact that we have a seasonally favorable period of time, that we may get a rally back. Did I anticipate a big move like this? No, I can't. I wish I could say I did. I didn't. Frankly, I'm just seeing this for the first time right now. So we recaptured yesterday, not one support level, but two. Now, what would be really sexy here is if we pulled back and retested, let's call it, where are we trading now? If we retested 185 and then we got a follow through to the upside, I like the setup. Here's our higher low, 197. We break out above that mark. We're going to 205 in a heartbeat. So I like the price action. Volume was below average, and it's probably going to drop down sequentially. So that's why I'm saying be careful with being aggressive to the long side right now. It's great for a short-term swing trade. We don't want to get overly aggressive right here, right now, because we don't know what the whales have planned for the first week of January. They're going to dictate which way this market goes. Do they take it down? Do they rally it? We don't know. We're going to be taking a very, very cautious approach in January. Why? The January effect. As go January, so goes the rest of the market traditionally. That'll give us a clue as to where we want to be, long bias, short bias. And right now, we can take a look at the markets, go to the Qs. Let's see how we're going to close out. First, the quarter. The quarter, as we go into the new year, we have a quarterly RSI at 88.47 on the Qs. Now, the Qs look really, really good, but you wouldn't know it. But we already have a bear market starting or started in the lesser quality growth names, the high beta names in tech. Look no further than the ARK Fund. While the Qs for this quarter are up 8.87%, the ARK Fund, that's Kathy Wood's fund, is down 11%. That's like a 19-point spread of variance. So, and we were lower. So just be aware that we have a bear market going on in certain segments of the high beta tech names. So it's just a question of, do we get follow through on the Q names? If the Q names go down, that's going to be a major problem for this market. So that's why we're watching very carefully Qs. But what are the two major components of the Qs as we go into the new year? Look no further than Microsoft. Number one component of the Qs. Look at the quarterly chart of Microsoft. I am chomping at the bit to short Microsoft. Why? Because they're telling you this is unsustainable. But let's face it, this has been unsustainable for quite some time. That's why we've been very, very disciplined with not shorting Microsoft yet. The market's going to send us a signal of when it's time. But when I go shorting, I'm going to be able to reference the signal of as to why I'm shorting Microsoft and the macro picture of why Microsoft's trend was unsustainable. And I'm going to be coming back here and saying, I talked about this in late December of 2021. This will not end well. And when you take a look at a monthly chart of Microsoft, it did rally yesterday, but we have a new monthly lower low. We're very extended on Stokes. This goes all the way back to, think about this. We haven't been below, this is amazing. We haven't been below 20 on stochastics, our momentum indicator, since 2009. Think about that on a monthly time frame. That's amazing. The other component that we're going to be looking at very carefully, this is the second largest component of the Qs. Apple. Apple is up nearly 22.5% on the quarter, trading above its 2 standard deviation Bollinger Band with RSI 84.78. Not as extended as Microsoft, but quote unquote overbought on a quarterly time frame. Monthly chart looks outstanding. I got to say, it looks like it's going up higher. We have new monthly higher highs, unlike Microsoft. Microsoft new monthly lower lows, but Apple is carrying the water right now for the Qs. So, we're using quarterly charts to identify opportunities, extreme overbought opportunities. Now, there are only 4 quarters in a year, right? So an event, a bearish event may in fact never happen in 2022, but we'll be watching very, very carefully. If the Federal Reserve comes back and they start more dovish talk. And frankly, they're still dovish despite their hawkish talk. So hawkish talk, because all they're doing is saying, listen, we're doubling up on the taper. What does that mean? Okay, it just means that we're going to throw less gasoline on the fire than what we were normally doing when we were buying $120 billion worth of treasuries and mortgage-backed securities. So they are in no way fighting inflation. Inflation is on a tear. And when you take a look at what we're looking at as macro trades as we go into 2022, I have my eye on the monthly chart of gold. And you can see that on this monthly chart, we have a bull flag setup. A beautiful base was built, nice rally, a years long consolidation. Now we're beginning to break out. So we're going to be looking at gold very, very heavily. We're already long of the gold mining stocks, silver, possibly adding more to silver today. So it's going to be a good year, but it's going to be a year that is going to be focused more on generating cash flow, taking a very neutral approach to this market, uh, managing our risk more so than we ever have in the past. Because when this goes, it's not going to be pretty. And it may not even be this year that it goes. But either way, we're going to be very, very disciplined. And here's how we want to be. As we proceed into the new year, I want to have no more than 50% of net liquidity exposed to the market. Why is that? It's because if we do get an event, what's an event? Let's take a look at an event. If we get an event, S&P 500, COVID was an event. Where was COVID? This is a daily chart. Here's your event. Here is an event. I want to have plenty of capital, dry gunpowder on the sideline, waiting to take advantage of the counter trend move. If you don't have enough net liquidity on the sidelines, you can't take advantage of opportunities as they arise. So right now we have record amounts of margin debt. If you're levered up, you're setting yourself up as being a victim of the market if it goes tomorrow. Sure, in the short term, if you get a bull market that continues into early 22, you'll do fine. But when the music stops and there's no chair left and the market falls, the bottom falls out of this market, the first to go are going to be the heads of those that are too heavily levered to this market on margin. And your enemy, your senior partner, is going to be your brokerage, because you're going to wake up after a big sell-off. Sorry, that was my one of my accounts shutting down. You're going to wake up after a big sell-off one day. You'll be looking at the end of the day, and you're going to be saying, all right, I still have buying power left. All of a sudden, you wake up the next day to a margin call. What that is your broker jacking up margin requirements. They're telling you got to put more cash in your account. And God forbid the market moves down that next day and you're in all sorts of trouble. Now you're on the defense. You're on your toes. You're on your heels rather than being on your toes. We want to be on our toes. We want to be able to react to take advantage of opportunities, not to have to go into defensive mode and sell when we don't want to sell. So that's the mindset going into 2022. And for all I know, it may never happen, but we're prepared to profit in any event. All right. And again, folks, there's a video below about our strangle trading, whether it be earnings or strangles in time. That just means overvalued options that have 30 to 45 days worth of time before they expire, and no earnings in between, right? No earnings in between those trades. So two types of strangles that we trade: overvalued options and earnings trades. All right, let's circle back, and I'm going to log off here in a moment. Let's take a look at the major averages. take a look at the Russell 2000. I didn't go over that yet. Nice rebound on the Russell. The Russell's up this morning. So what we're looking at here, lower tier, we have the 10-year Treasury yield, the dollar, and the VIX. We always keep these at the bottom because we always want to. This is our dashboard. When I know what these are doing down here, I get a good feel for what equities and commodities should be doing. So right now, bond yields are stable. The dollar is coming off of its lows, but still weak on the day, with the VIX subdued. So equities should be doing okay, and commodities should be doing okay. Let's check them with gold again. Gold is holding its gains, consolidating. I think we press up higher. I'm looking at, if we get a close on the year on gold of 1,800 or greater, that should constitute a monthly breakout on gold. What else do we have? Check back in with NVIDIA. NVIDIA back down in the 280s in the pre-market. KMX is our earnings trade. All right, so this is consolidating now. Remember, our strikes are down at the 115 strike to the put side, to the call side 155. So the probability of those strikes getting tested is highly improbable. So if these shares expire worthless, or these options expire worthless tomorrow, that'll be a 9% return on capital since yesterday. All right, folks, I'm going to log off, and I'm going to wish everybody the most sincerest Merry Christmas and a Happy New Year. I know it's been a rough year for everybody in terms of whether it be pressure by the government, whether it be COVID, whatever. I mean, life has been difficult, inflation, whatnot. Try to take some time off and reflect. And I wish everybody a very, very Merry Christmas, and the best to you and your families, the best of health. And we're going to have a great 2022. Join us and be well. Take care, folks.